Welcome back, everyone, to the deep dive. Sometimes a project pops up that, well, it just makes you stop and really think. Today, we're doing just that with AIFEEX, a name that's definitely making some waves. We got their latest updates right here, and our mission, really, is to unpack their strategy. Not just what they're doing, but digging into the why. Why these moves, and what does it all mean when you look at it like a strategist ready to unravel this?
Absolutely. It's fascinating, actually. AIFEX seems to be using this really layered approach, building value, building credibility. It feels like a masterclass in strategic thinking, trying to connect different worlds. We'll look at their specific methods, those recent updates people are calling game-changing, and their pretty ambitious roadmap. The goal is to give you a clear, confident view of where they might be heading.
Okay, let's jump right in there, because this first point confuses a lot of people. The AIFEX price. If you open the AIFEX app right now, you'll see AIFEX listed at $19.69. But then you pop over to somewhere like PancakeSwap, a public exchange, and it's trading closer to $8. What is going on there? I mean, why the big difference? Is that normal?
Well, it's not a mistake. Let's put it that way. It seems very much like a deliberate strategic choice. A clever one, potentially. That 19.69 price inside the app, they call it an anchor price. And it's not just pulled out of thin air. It's tied back to their original liquidity pool, which apparently supported AIFEX around $18 to $20 before they did a system upgrade. So it sets a kind of historical benchmark, asserts a value they've hit before.
Right, so it's like saying this is what it has been worth and what we think it can be worth. It's a statement, but what's the actual effect of having these two prices floating around for, the average person looking into this? Why should they care?
Exactly. And this is where the strategy connects to, well, attracting users. It creates a really strong incentive. Think about it. You see AIFEX at $8 on PancakeSwap. You think, okay, I can buy it there. Then you bring it into the AIFEX app to stake it. And why would you do that? Because inside the app, when they calculate your staking rewards, they value your AIFEX based on that higher anchor price, the 19.69.
Ah, okay. So buying low outside lets you earn rewards based on a higher value inside.
Precisely. It's a really smart way to pull capital from the open market into their own ecosystem and get people to lock it up through staking.
And that brings us perfectly to the staking itself. This is where it gets really interesting, right? They launched this AI DeFi staking back on August 1st, and the rates. Weekly staking at 3% daily, yearly staking at 3.5% daily. Your initial investment, the principal, is locked, and all the returns paid out in AIFEX. Now, those yields sound incredible, almost too good to be true for some. What's the strategic thinking behind offering such high returns?
Yeah, those numbers definitely catch your eye. And you're right to question high yield sustainability is always a concern in DeFi. But AIFEX frames this as the start of what they call a deflationary game. By locking the principal and paying the rewards in AIFEX, they achieve two things at once. First, a big chunk of AIFEX gets taken off the open market right away and put into staking pools. That reduces the circulating supply.
Okay, so scarcity increases.
Exactly. Second, investors get those daily AIFEX returns. It's like getting a little payout every day, which makes them want to keep their funds staked in the system. It's a powerful loop. Reduce supply, reward holding, which further reduces supply available to sell.
So it's not just about earning yield. It's baked into a strategy to manage the token supply and encourage people to stick around long term. How does that stack up against other staking programs you've seen?
Well, many projects have staking, obviously, but the key here seems to be how integrated it is. It's not just a feature bolted on. It looks like a foundational part of a bigger multi-stage plan to influence the market and how investors behave. It's about supply and demand management from the get-go.
Okay, let's shift gears slightly. They also have their own stablecoin, USDAI. But as you mentioned, it's not currently holding that one-to-one peg with USDT. It's trading around, 40 cents on the dollar. Now, usually, a stablecoin losing its peg is seen as a big red flag, right? It suggests instability. How does AIFEX explain this?
Right, and that's the typical reaction, and it's a valid concern normally. A stablecoin should be stable. AIFEX's explanation, again, frames it strategically. They say the current lower price is mostly because supply initially outpaced demand, standard market forces. But instead of viewing it purely as a problem, they seem to have actually leveraged it. Think about it. If USDAI is only worth 40 cents, you're probably not eager to cash out your earnings right away, are you? Converting at that rate isn't ideal financially.
Ah, okay. So it discourages people from immediately withdrawing and selling.
Exactly. It subtly nudges them to keep their funds within the AIFEX system, perhaps restaking their rewards, which again helps lock up capital and reinforces that deflationary pressure we talked about.
It's clever psychology, a gentle push to stay in the game. But still, the long-term credibility of a stablecoin depends on that peg, doesn't it?
Absolutely, it's a crucial point. While it might serve a purpose in this initial phase, according to their strategy, demonstrating a clear path back to a stable 1.1 peg will be essential for USDAI's wider acceptance and trust down the line.
Okay, now let's talk about August. End of August, 25th and 26th, AIFEEX made some really big rule changes. The source material calls them a game changer. This sounds like a major pivot point. What happened?
Yes, those dates seem pivotal. They significantly shifted the dynamics and really doubled down on the core strategy. Three key things happened. First, they removed USDT from the staking system entirely.
Wow. Okay, so only AIFEX can be staked now.
Correct. If you want those high staking yields we discussed, you have to buy and stake AIFEX. No other options within their system. This directly forces demand onto their native token, AIFEX. It channels all that staking interest straight into buying pressure for AIFEX, amplifying the deflationary effect.
That's a bold move. Really narrows the focus onto AIFEX itself. What was the second change?
Second, they stopped handling reward exchanges internally within the app. Now, if you want to swap your AIFEX rewards for something else, you have to do it on PancakeSwap, the decentralized exchange.
Okay, so pushing transactions out onto the public blockchain.
Exactly. Everything moves directly to the DX. This makes reward claiming and swapping fully transparent, all recorded on-chain for anyone to see. It's a strong signal towards decentralization and building trust through verifiable actions, rather than keeping things in a closed system.
Transparency is huge in crypto, definitely builds confidence.
Yeah.
And the third update. You mentioned liquidity earlier.
Yes, and this one is critical for market stability and confidence. Third, AIFEX created a brand new trading pair on PancakeSwap, AIFEX against USDT, and they injected $3 million worth of USDT liquidity into that pair. That's significant in itself.
Okay, providing a solid base for trading.
But here's the kicker. The liquidity provider tokens, the LP tokens that were generated when they added that liquidity, they immediately burned them.
Burn the LP tokens. What does that mean exactly?
It means that the $3 million in USDT liquidity they provided is permanently locked in that PancakeSwap pool. It can never be withdrawn by AIFEX or anyone else.
Whoa. So they essentially threw away the key to that liquidity.
Precisely. It's an irreversible action. It proves an incredibly strong, unshakable commitment to supporting the AIFEX price on the open market with real dollar value. It establishes a direct, transparent anchor market price linked to USDT, reducing reliance on their own USDAI for external valuation, and gives the market a very solid, immutable reference point.
Wow. That's not just adding liquidity, that's making a permanent public commitment. That seriously boosts credibility, doesn't it?
Yeah.
Puts their money where their mouth is, quite literally and permanently.
It absolutely does. It's a powerful signal about their long-term belief and commitment to the ecosystem's foundation. It addresses potential concerns about rug pulls or liquidity withdrawal head-on.
Okay, so we've seen these individual strategic moves, the pricing, the staking, the updates. Let's zoom out now. The sources talk about a big picture, a grand plan that AIFEX is executing. This sounds like where it all comes together. Can you walk us through the phases of this blueprint?
Yes, this is where you see the long-term vision really laid out. It seems designed to systematically elevate AIFEX from just being a DeFi token to becoming something more like a global asset. It's ambitious. Phase one is essentially what we've been discussing, the current situation. Using that dual price strategy, the 19.69 anchor price inside versus the lower market price outside, to attract stakers.
Right, pull people in.
Phase two covers those August updates we just talked about. Enforcing AIFEX-only staking, pushing swaps to the DX, burning the LP tokens, all focused on driving up the total value locked, the TVL, and creating that strong deflationary pressure on AIFEX supply, really tightening the screws on supply.
Okay, lock it down. Then what?
Phase 3, planned for around September, is a crucial bridging step. They intend to launch their own centralized exchange, a CEX.
Their own exchange, yep.
Yes. And the idea is this CEX will start to connect the internal anchor price and the external market price, allowing them to gradually, organically move closer together. But building a successful CEX is a huge undertaking on its own.
No kidding. Regulation, security, liquidity. It's complex. What's phase 4?
Phase 4, aiming for October, is massive. They plan an IPO, an initial public offering, on the Hong Kong Stock Exchange, the HKEX.
An IPO on a major stock exchange.
Exactly. This is where the narrative fundamentally shifts. If successful, AIFEX stops being just a crypto token and becomes linked to a publicly traded, regulated company asset. It brings traditional finance credibility. Of course, an HKEX IPO has enormous regulatory hurdles.
Huge. That's bridging worlds in a big way. And the final phase.
Phase 5, targeted for later in the year, is the ultimate goal, an IPO on NASDAQ.
NASDAQ. Wow.
Yes! This represents the global narrative phase, completing the transformation of AIFEX from its DeFi origins into a recognized, globally traded asset on one of the world's biggest stages. It's a very clear step-by-step pathway they've outlined, moving deliberately from the crypto world towards traditional mainstream finance. Extremely ambitious.
That is seriously structured and incredibly ambitious. It's not just a crypto project roadmap. It's like a blueprint for building a financial institution that starts with crypto and aims for the top tier of global markets. The execution challenges are immense, though.
Immense, absolutely. But the clarity of the vision and the step-by-step logic are quite compelling from a strategic standpoint.
So, for our listeners trying to process all this, what's the right mindset? If you're looking at AIFEEX, focusing just on the daily price chart seems like missing the entire story, doesn't it?
Completely missing the point, yes. The company itself stresses focusing on this big picture, not the short-term ups and downs. They've even boiled down their whole strategy into a simple, powerful framework: lock, pump, bridge, narrative.
Lock, pump, bridge, narrative. Okay, break that down.
Lock. That's about locking up the AIFEX supply. Using those aggressive staking rules and incentives to take tokens off the market and keep them locked in. Control the scarcity.
Got it.
Pump. Now, this isn't pump and dump. In their context, it means systematically increasing the value, both perceived and actual, through things like a high anchor price for rewards, burning the LP tokens to prove locked value, driving real demand through staking requirements. It's about building value methodically.
Okay, value building, not manipulation.
Bridge. This is that crucial connection they're building between the DeFi world and traditional finance. The CEX is the start, then the HKEX IPO, and ultimately the NASDAQ IPO, creating pathways between the two financial systems.
Connecting the dots.
And finally, narrative. This is about shaping the story, changing how people see AIFEX, moving it from just being another crypto coin to being perceived as a valuable asset of a legitimate global company, telling that compelling story of transformation.
Lock, pump, bridge, narrative. That really simplifies it.
It does. And if you understand that framework, that long-term game they're playing, AIFEX suggests you're not just investing in a token. We're almost participating like a co-owner in this ambitious journey to transition a digital asset onto the global financial stage.
That is a powerful perspective. Not just holding a token, but being part of a strategic vision unfolding. It really emphasizes the depth here, but also the scale of what they're trying to achieve.
Wow. What a deep dive that was. We've really peeled back the layers on AIFEX's strategy today. From that unusual dual pricing, the powerful deflationary staking, those really decisive August updates, and then mapping out that huge multi-phase plan to connect DeFi with traditional finance. It certainly seems like every step is calculated, aimed at building trust, squeezing supply, and pushing value towards that global ambition, even with the big hurdles involved.
Indeed. When you look at the recent actions locking supply so aggressively, creating value anchors like the burned LP, boosting transparency with DEX swaps, and laying out this clear path towards major stock exchanges, it really paints a picture of a very strategic, very confident approach. It encourages you, I think, to look past just the daily charts and appreciate the sheer scale of the vision. Turning a crypto token into a global corporate asset, that lock, pump, bridge narrative mantra, it captures that ambition perfectly.
So for you, our listener, what's the takeaway? Well, it shows how understanding the strategy behind a project can totally shift your perspective. You move beyond just guessing price movements to actually grasping the long-term game plan, including the significant risks and challenges that come with such ambition. And it leaves you wondering, doesn't it? As more projects try to bridge this gap between the decentralized world and traditional finance, could AIFEEX's multi-phase roadmap, if they pull it off, become a kind of blueprint for others? Could it fundamentally redefine what a digital asset can aspire to be? Or are the hurdles just too high? Lots to think about. Thanks for joining us on this deep dive. Until next time, keep exploring, keep questioning, and keep learning.